Aaron Camara. This is my
Mike
brother,
Adams.
Adams.
And of course the Commissioner, Mr. Ames, Mr. Phillips, and Ms. Litz. These are media members, and Jamie's the County Administrator. I did send them your cost estimate in advance, so they've seen that, and also a brief summary of what you're trying to do there, but maybe it would be useful for you to explain that to them. And they are seeking assistance from the County Affordable Housing Fund. So before we get into that part, maybe they can just talk a little bit about what you do there.
Basically, what we're trying to do is really improve that area of Lebanon. You know, the standard status quo right now is to come in and buy a property and just leave it as is and get the money out of it. We actually want to improve the look and the feel and the quality of tenant that's there, and also provide a service to disabled veterans and veterans that are currently getting treatment at the VA hospital. Currently, we even without the funding, we're trying to move forward and get an example room done to the quality level and the standard that we're looking for. And I do have pictures of that along with me if you guys want to see what we've done to just one particular room. But basically, that's just a quick snapshot. We really want to improve the area. This is the first of hopefully many projects that we can take on in the area to continue to bring the area up. Lebanon is screening for this type of thing to happen, and we are very interested in pursuing it and continuing to improve the area. Just a little bit of background on myself. I own a company called Monarch Enterprise Incorporated. It's a commercial construction company. We kind of built our name by building all the Five Guys burgers and fries in most of Pennsylvania. We do a lot of restaurants. For some reason, we were just kind of pushed into that niche, but we do a lot of health centers for RHD, which is the largest healthcare provider for low-income families in the United States. You know, it just kind of seemed like a nice fit to kind of continue on. There's a lot of construction obviously involved in the renovation process, and you know, Mike has a lot of experience in the rental market with many homes and rental units that he has bought and renovated, sold, etc. So that's how him and I kind of got together on this venture.
And your cost estimate is $250,000, just under $250,000, right?
To do both buildings.
I guess I want to be open with you, and I know Bill and Bob have a fresh perspective on things, but in the past, am I wrong, Ray, or is this the money we used for the $500 rebates when the flood hit to the people of our community? So it was local money that we gave back to local people. We've never given it to private enterprise in the past. So I just want to let you know that that has been our history. Okay. I don't know what the future holds, but I wanted to share that history.
Right.
Right now we're working with MHMR, Sam's out of Reading, and also HUD-Dash from the VA, which is all low income. Basically what we have to do is modify the homes. The apartments that are in there now, we're modifying them so they're two people are sharing a room now, because with the funds they get, that's all they can afford. So basically we're helping the lower income people, and we're trying to make them a safe, clean space, which right now we see, and I'm from Lebanon. I grew up in Mount Wilson, and I love Lebanon City, and saw the deterioration over the years and everything. And so I too have a construction company that we do mostly code improvements. So I'm really interested in getting back into the Lebanon market again and help bring it back to its luster. So that's what we're looking at. We're trying to help the people that need the help, and then also see if there's some funding that'll help us get there also.
And this isn't just the decided last week that we're gonna do this. This is over a year in the making. We actually approached the VA, asked them what are they looking for, what's their needs. Handicap accessible rooms and restrooms are a huge need for them. And on our first floors, we're gonna make, we wanna make handicap accessible first floors on all the buildings so that we can service that clientele that they have. I mean, it's, I can't
Do you have
remember
a
the
permit
number off
from
the
the
top
city
of
for
my
a
head.
single room? To convert to it?
Well, not yet.
That-
We're
that's my
doing what's,
concern that
we're
you've started, 'cause
doing, we're
the city
doing
has
what's
some-
existing, we're doing existing stuff right now.
Because the city has some pretty strong ordinance against conversion to single room occupancy because they have so much of it.
Right.
Yeah.
And I think before you get very deep in the project, you really need to be talking to their zoning officer.
Well, we've approached Lebanon many times, and I guess they were in limbo on zoning officers
And
and.
they have a new one in place.
Turnover,
and,
Yeah,
Yeah, turnover.
I think you do need to be talking to them before you
because
get.
we have been doing that.
You've come, and I say this as respectfully as I can, kind of out of the blue with this proposal. There has been a message to our local builders that we are not entertaining this sort of thing. So it would be unfair in my mind to just award money to someone who walks in the door when the local builders have not been informed. If we have a change in philosophy, I feel it would be best to notify all the builders of our change in philosophy and give everyone an equal chance. But these dollars are finite, they're limited. They're not going to go far if we open it up that everybody can just come in. And as I said, we have used it to reinvest in Cedar Haven. We have used it to reinvest in our local citizens who have had the misfortune of flooding and not had enough flood insurance, not had, FEMA doesn't pay for it all. And, they were so grateful. I mean, just so grateful. So I can't make a decision today. I really, and I think we need to have a conversation, I really would need time to do a complete 100% turnaround to do what you're asking. And I don't say that harshly. I'm just telling you that's where I'm at this point.
Yeah, that's very fair. That makes a lot of sense.
Ray, what insight do you have into this?
Well, there are issues, and Joanne raises some of them as recently as last year. The folks that now own whatever Spruce Park is called, Lebanon
Yeah,
Terrace or something, they were in
applied,
and requested a match. They had I believe, an energy conservation grant from the state. They wanted to match for that, and the then board declined to fund it because they were a for-profit entity that owned the project. And there's been a history of that, of folks that have come in over the years. So I do agree that should you choose to do this, you should, A, target how much money you might want to make available for it, what parameters are going to be connected with it, and then not so generally, so everybody that might have an interest could apply for it. But as I said at the time to the prior board, there are also regulatory issues that are difficult to deal with. The housing fund is limited, it has an income cap. So you have to have some kind of a regulatory agreement attached to the loan that guarantees that the residents don't exceed that income cap.
Right.
And it's all well and good to say you're going to have that agreement, but as I said at the time, and Joanne will remember, the only real leverage you have is foreclosure. Because if they suddenly don't meet that cap, then there's really no tool to force them back into compliance short of foreclosing, and you're probably going to wind up in second position as mortgage-wise. So even if you would foreclose, you'd wind up at a sheriff's sale having to outbid the prime lender, assuming there's a first mortgage on the property, which is one of the reasons why I think the prior board tended to stay away from, and it's all been loans, by the way. There's never been, except for Habitat for Humanity, no grants have been made from the fund. The city has been allocated money to run their home buyer and rehab program, but in every case, the mortgage and note was in the name of the county. So when those loans pay off, it doesn't go back to the city, it comes back to the county's fund. And the prior board of commissioners was very clear about that. While they were willing to make allocations to the city, particularly when the city was short funding from time to time, the money still had to come back to the county's fund. So it's always been loans. It's been that type of thing with the city. Habitat's gotten several grants, and then the various nonprofit developers in town have gotten loans of one form or another. The most recent was Mifflin Mills. You made a deferred loan there. You're in second or third position behind the state's loans.
Previously, we did community
Most of the senior
homes.
properties in town,
Yeah.
community homes, have had loans. In one or two cases, you did construction financing for some of those projects, where they had a cash flow situation where they weren't going to get their money until after the building was built. Oak Terrace comes to mind primarily. There you did the county did a construction loan that was paid at closing when the building opened. It was paid off. But again, it was a low or no interest loan to them for the construction period, and you got your money back after the year and a half of construction. That's the kind of thing you've done in the past. Plus you do little programs like the access program is run from there, where we install handicap ramps and improve bathrooms, that kind of thing. That's a small amount of money each year you do there. And you supplement your housing rehab and your first-time home buyer program from the fund. Very small numbers, 100,000 maybe a year. And you've pledged a small amount of money. The Housing Authority with Phil Haven is doing a supportive housing program for persons with mental disabilities, and there's a small amount of money each month comes out to pay the local share of that. They get a HUD grant for the bulk of the work, and you're paying the local share of that grant from the fund. So that's the kind of things you've done in the past. It is clearly eligible. If the commissioners determined that you wanted to fund this type of thing, you could, and set whatever parameters that you wished within the income caps that are set by the law.
Jim, any questions? Yes, Gordon.
I do. Gordon Wise from WLBR. In your talks, how many units would you be putting into these buildings?
Currently, there's, in the Railroad House side, I think there's 8 apartments and 5 rooms. And in the Don side, there's 1 apartment and 5 rooms.
5 rooms, yeah.
Is
I
that,
think you told me you wanted to wind up with 7 apartments and 21 rooms.
Yeah, that's what we'd like to end up with. Yep.
is that an active apartment building now, the Railroad House?
Yes.
I'd lost track of that building. And is there anything going on downstairs? Retail?
Other than us cleaning it out? No, nothing.
No, I was president in time from 1994, I guess.
Wow.
We just started taking everything out of that first floor.
They finished cooking that night, and the next morning they
Yep.
turned the lights out, and that was it.
Where is the base of your business?
Manheim.
Manheim.
Yeah, both of us actually.
Yeah, I live right near Mount right now. I live on the Lancaster, right across the border.
My questions, you were coming to the county for the home dollars, and what was the specific request? I didn't hear that.
You're asking for the full 250?
Yes, yes.
Okay. And how much do we have in that account now? Do you know?
Gross is about $1.5 million, but about $250,000 is committed to various things, the access, the rehab, the home buyer, the little bit of the share that we give to
Phil Haven?
the Phil Haven project. So there's about $1.25 million net right now. There had been a reservation of $500,000 for the Mateo Place,
Right.
but they didn't get tax credits. I don't know whether they're going to apply next year and come back. They would have to come back to the commissioners if they did for a new commitment. There had been a $500,000 commitment to that project.
Now, the difference between that project and this one, Ray, just clarified.
Well, essentially, it's a
Nonprofit.
nonprofit.
That's what I thought.
And the nice thing from the regulatory side is that PHFA records a 30-year covenant that runs with the land restricting the income. So we don't have to deal with the
Right.
income limits here, because there's already a state agency that has got the first mortgage that has a regulatory oar in the water. So that's the beauty of that, and that's why you've pretty much done those tax credit deals in the
Yeah.
past, because all the regulatory side's taken care of by the state.
Is this moving forward contingent on approval from the county, or do you have other options?
We're gonna move forward with our own financing. It's just gonna be at a slower pace. Really, like I said, our goal is to take some of these, I don't wanna use the term blighted, but less than desirable properties and bring the standard up. It's gonna help the community, it's gonna help the neighborhood. There's so many properties that are at that position right now that, it's just a perfect storm of opportunity opportunity to take advantage of that and bring the value up in the neighborhood at the same time.
I think your project's definitely admirable and worthwhile. The banks are so low with their rates right now, I don't know that we could do much better. And I don't know, I'm just curious why you wouldn't go to a bank first.
Well, the reason being that we want to give the community an opportunity first to be basically a partner in the improvement of this